low. Everyone screams. Look at the narrative and the logic and the context. Low, below a key level, 16,200. Bottoms in, right? It rallies. Bottoms in for sure, right? It purges them, flips them bearish. All right. And then it breaks the high that caused the purge. The candle, the bullish candle that caused the purge, breaker, right? And it didn't go the way you expect it to, which is simply going like this. This is retail logic. It makes no difference than any other retail trader, right? What happens is a much more psychological process, which is a low, a high, a low, a violent lower low, right? With the purpose, it's not just a pattern, it's the purpose of flipping the bias of the uninformed, right? Now, is this a candle enough to flip the bias of the uninformed? This one over here. You tell me.
Most
is this
definitely
candle? Is this enough to flip the bias of the uninformed?
Mostly, yes.
It probably flipped off your bias too, right? As smart money, quote unquote, traders, correct? So the purge is not just random. It has a purpose. Every single price movement has a purpose and a logic. Right? Someone's getting fucked over, and someone's fucking them over. Every single one of them, right? So this is a real market structure shift where there's a high, a purge, a shift. And remember, note this down for the turtle supers out there. A real breakout never, or barely, but never allows you to participate, right? So when I'm looking for an entry, then all I'm looking for is two things. It's either turtle soup down here. If I miss it, which may happen sometimes, once in a while, if you miss turtle soup, right, then you have an order block over here. If you miss that, then you have the OTE as a second major entry. So you'll be offered two major entry points by the market. At the beginning of any expansion leg, from the up or the down, right, you're offered two opportunities. The turtle soup and a violent retracement with the purpose of scaring everyone away, right? So you see that right here, and you'll see it all the time. It's how price books. It's how turtle soup happens. So entry one, this is another thing which I've not seen anyone talk about, but something I've noticed myself, right? Which is the sequence in which you catch the entries is entry one, turtle soup. If you miss it or you're unsure, entry two, order block FVG, stop loss turtle soup, low. And entry three is a violent retracement, OTE, whatever you want to call it, right? So we got exactly that over here. We got exactly that over here. Now, think about how different that is when you measure high and low, and you look at the higher time frame as opposed to the only looking at one time frame's market structure shift. And again, we apply here the concept. We apply here a concept, the same exact concept of the same exact concept of a lower time frame market structure shift is less relevant than a higher time frame PD array. You'll see that happen a lot, right? And I've spoken about many things right now, and many of them can be a model, but this is one of them, which is a lower time frame, a daily market structure shift is less relevant than a weekly. And now look at the monthly, right? And tell me if you flip your bias or not. Now, a bullish or bearish?
Bullish.
Can anyone convince you to be bearish inside this gap, monthly gap, right? Your mother, your father, your wife, anyone? Nope. Right? So all that happened was a higher time frame PDRA, which is the key, a higher time frame PDRA, more important than a lower time frame market structure shift with a turtle soup happening inside of the higher time frame PD array, right? That is why I chose this one. It's the weekly FVG, right? And gaps are rebalanced. It could have bounced from here. Keep that in mind. But this is the monthly FVG's beginning as well, right? So, and the monthly FVG was, I expected it to retrade to the monthly FVG. And that is exactly what happened, right?
Romeo, so
What's up?
even if you say don't be a pattern trader, but on the higher time frame, we kind of are looking at patterns in a way.
You're not looking
Correct.
at patterns. You're looking at order flow, right? Difference.
Even though if it's a fair value gap and a breaker on the monthly,
And
we
this,
have to,
this is an
we have to trust
application.
it.
This is an application, by the way. This is an application of the concept which I said: if a daily key level fails, remember, if a daily key level fails, order block, then we move to the weekly, which is this one. Now look what happened. So this is a visual application of the concept. The daily order block failed. You look at the weekly and the monthly, and you're saying we're trusting a pattern on the weekly. No, we're not. We're trusting a logic and a narrative, right? Which is what happened over here. Smart money pushed this below the low. Everyone was bearish over here, accumulating positions in order to distribute them above this high, and this high, and this high, right? So
Romeo?
they pushed below this low, accumulation, right? Taking the position, accumulation over here, manipulation, gathering more positions, and distribution. AMD, power of three, classic. Nothing new over there either. It's just a matter of training your eyes to look at it. You were saying?
That November low, the candle which purged, that was the November low, right? That was into the monthly consequent of encroachment of the FVG, the 16,200 level.
Yes, that is one of the reasons. That is correct.
Okay.
Right? But right now we're not focusing on this one. We're focusing on this one right here. We'll be talking about this as well, this whole range and how it played out. But for now, we're focusing on this concept of two concepts right now, right? A lower time frame market structure shift is, I'll close the mic, is less important than a higher time frame PDRA. And buy low, sell high. Don't buy high, don't sell low. You can simply look at the higher time frame, and that's enough. Right? It'll guide you. We turtle souped into the higher time frame PDRA, and using that logic, bingo, right? I'm sure some of you caught this as well on Twitter. Turtle soup. All this is turtle soup. Turtle soup all over the place. Turtle soup over here. Turtle soup. Right? Now, I can give you the entry methods right now, or I can wait, be an asshole, and give them to you later, the next session. Which ones do you want?
Now.
Were you supposed to do number 3 first?
Exactly. That was the plan, which is to go through market profiles. This is, of course, this whole thing was showing the importance of a higher time frame PDRA, in case someone got lost. right? And all the noise. All this is buying low, selling high. Rule number one, keep it in mind. If it doesn't make you money, it saves you money. And blending the higher time frame into the analysis always, right? A lower time frame market structure shift is less relevant, is irrelevant in front of a higher time frame PD array, right? A side note for those recording, I hope you caught these. You caught all this. You caught all of this. Did you? Did you not caught?
I have a doubt.
Romeo, Z1 Trader is asking you to unmute him.
What are you saying?
Is the Z1 Trader who's recording, he wants to speak.
There is. I had to mute him because of the noise.
Yeah.
My bad, my friend. So,
Can I ask a question?
tell me.
The low that happened, the turtle soup, it could have digged deeper into that weekly FEG, right?
No, it couldn't.
How could you say for sure that it couldn't have digged deeper?
Because I called it.
Because of the breaker.
See, seriously, all jokes aside, let's see why it could not have dug deeper, right? The main reason being I called it. Second reason being, let's see right now. Where's Z1? 1 second. I have a question right now. Hold your question. Where's Z1? Muted. Vanished. Poor guy. Z1. Where is? Now, if you're binge watching this, right, as an entertainment, then you're not going to get anything. So I know some of you are already taking away stuff. Good for you. I see you, by the way. I see a bunch of people, a bunch of notable people. Always good to see you passing around. And where is Z1? You have to rejoin, my friend. Z1.
You know that
I got.
previous question.
So you have a question, but before you ask the question, I have another question to answer. So let me just answer that. Allowed to speak. Z1, you have to rejoin, my friend. You're muted. It's not allowing me to allow you to speak. It is saying this guy records too much. He can't speak anymore. Allowed to speak. Exit, re-enter. I'll be back to you right now. So, why could it not have dug deeper? Why could it not have dug deeper?
Breaker on the left side in November.
What are you saying?
The breaker in November on the daily.
Very good. And we have, of course, this is a classic. Why do some gaps remain unfilled, right? Because of balanced price ranges. Right?
Yep.
So when you have a inverted PD array, so let's assume we were on a sell side, and we've now flipped to the buy side of the curve, right? The PD arrays on the sell side of the curve, like this one, right, are going to be used as support on the buy side. And they'll create PD arrays similar to them on the buy side. And you can go and backtest that one and verify it. It's a basic ICT stuff, nothing new, right? So that's how you stop price from going down. Plus a breaker. And we know the breakers prevent gaps from filling. So when you see a breaker and it does fill a gap, then expect the gap to be left partially filled or completely unfilled, right? The monthly breaker as well, over here. And here's another one, which is a higher time frame gap will leave a lower time frame gap unfilled. Copy that one. Go and paste it on Twitter. Right? So the monthly gap over here was filled, right? The monthly gap was filled. So the higher time frame gap is going to leave the lower time frame daily gaps unfilled. You blend that with an OTE over here. So these daily gaps, not daily gaps, daily gaps. The question is, how do you know it's not going to fill? This one, That's how I know, because of the BPR, the breaker over here, right? As we said, we can invert PDRAs and reuse them. But the most important thing for me is turtle soup prevents gaps from filling. And if you get a turtle soup and a shift on the lower time frame before the gap, what do? You wait? Nope, you enter. Right? So all these reasons blending together to give you no reason to expect a dig deeper. Could it have? Maybe. Was it likely? Nope. How do I know? I just know, right? It's chart time, tape reading. The more you see something, the more likely movements you see. Like just by intuition, when I saw this happen, right? Just my intuition. When I saw this happen, then it was extremely unlikely in my experience that we do this, right? That we do, we go and we simply go and do this. It is an extremely unlikely price movement, right? But that's not a scientific explanation. Intuition is not a scientific explanation, which is why you have those measurement tools, the data ranges, buy low, sell high, higher time frame FVG into a lower time frame liquidity pool, and boom, you get a nice, juicy turtle soup. Right?
All the confluences are here, including open, high, low, and close, or open, low.
So it was exactly, and we come to the final part. I think you saw this with me before, right?
Sorry?
Zoe.
Yeah.
If your Zoe was talking.
Yeah.
You saw this with me before. Right. Okay.
Yeah, I was watching this.
I recognize the voice. So, replay. What happened? Let's go and check the monthly profile for Power of 3. Right, so time. So you have the beginning of the month, March, and you have the end of the month, April. April. Right over here. So, we have week 1, week 2, week 3, week 4, right? We had accumulation, week 1, manipulation in week 2, right? So what happens when, which is pretty much the London session of the monthly candle, right? So what happens when you get a manipulation Power of 3? Think in Power of 3. What happens when you get a manipulation into a higher time frame PD array? 20 discount, 40 discount, 60 discount, right? All these discount ranges, plus a higher time frame PD array, plus a liquidity pool in the previous 20, 40, 60 days, plus Power of 3, plus an OTE.
It's the perfect recipe for a smart money reversal.
You have this. This is why I was super confident and became a Bitcoin maxi down here, right? Temporarily, for a while, not for long. Right? So this is why right here, as it fellas, it is time to blast to 25, 27, and 32. Right? Turtle soup. But it's not only a high and low. That's the mistake you're making. Right? Those who send me on Twitter saying, oh, I tried a higher low and it didn't work. Fuck you, Romeo. Right? No, fuck you. You messed up. You go and check. You look at price holistically. Right? You don't look at price from one angle. You look at the whole. Ideally, of course, you go through the whole process, which is the good old ICT process, right? Good old mentor. The process, which is number 1, seasonal tendencies. Number 2, monthly bias. Number 3, weekly profile. Right? And number 4, time of the day. Of course, monthly bias with the data ranges are between these two, right? Because the monthly bias is the data ranges, 20, 40, and 60. And it's also the way it's two things. It's the data ranges and it's the way you expect the monthly candle to print. Right? Bias versus narrative. Bias is why should price go where it's going. Narrative is where is it going, right? So accumulation, monthly bias, right? We expect a bullish candle on the monthly. Let's break this down from 0. Monthly, seasonally, of course, Bitcoin doesn't have that large of a history to have a seasonality yet, but it eventually will. When it lives long enough, it'll have a trustable. It does have a trustable seasonality in September and October, which is September has a rally at the beginning of the month, and it has a sharp decline mid-month. Right, that is a seasonality trick on Bitcoin. So the point is that seasonality not that reliable. So I'm not going to consider it right now. Monthly bias, we're expecting a bullish monthly candle. Why? Because we are inside of a higher time frame monthly PD array. Order block here. Now, what are the criteria for an order block? You guys know by now, right? After all this time following me. What's the criteria for a good order block? For a high quality order block? Anyone knows?
Created in a liquidity pool.
FPG.
Sorry, you go, Robin.
So not just choosing any down close candle, right? To choose a high quality, high probability order block.
It should be the one taking liquidity.
1 takes liquidity. And
Fake candles.
number 2.
As an FPG.
Very good. Number 3.
3 is a thick candle.
There. Who are you? Very good.
Robin.
Robin, right. It's a thick, heavy, bulky candle. Right? It's a nice. It is a thick candle, right? So, based on that, the monthly bias is up, right? Go to the weekly. The weekly bias is also up, right? And based on those two, you can refine an entry to time of day, right? Weekly profile and time of day. I won't be touching on that because that is all on ICT's content, right? Maybe I'll show one example. I've had a turtle soup intraday, but that is something I will not be talking too much about. So weekly bullish, monthly bullish, and then you go to the daily. So you draw the PD arrays on the higher time frame, right? You draw the opening price. As you know, we want to buy below the opening price when we're bullish, and we want to sell above the opening price when we are bearish. So opening price.
Not a chill.
Now you go to the daily. Monthly bias up, weekly up. You're going to draw an opening to March, open, close. In a bullish market, right? This is pure ICT. It's not pattern trading. It is the way he intends you to learn it, right? Even yesterday in the space he made. Same thing, but no one's willing to see, right? Everyone wants to find a pattern. In a bullish market, we buy below opening price and expect a rally, especially when there's a higher time frame PD array, and that goes into when can we anticipate a classic buy or classic sell candle? Which won't be spoken about over here, right? In this one, but that's a little hint. You want to buy below the opening price into a higher time frame PDRA, which coincides with liquidity pool, plus OTE, right? Dealing range, and you get a rally. Does it take some effort? Yes. Does it come intuitively afterwards? Yes. Is it a one shot, one kill? Yes. You enter over here and you chill. You don't have the sufferings of people who are waiting for an entry up here. And they get nothing. They get an IFED over here. And they're afraid it's going to come down here anyway. So they don't enter. And it rallies, right? So buy below opening price in a bullish market and sell above opening price in a bearish market. It's ICT 101, right? That's the application of power of three. Using a valid, high-quality order block, the monthly. So we can now get into the entry techniques. That's example number 2, right? An in-depth example. We got example number 1 on ES, right? Let's go to ES. Example number 1 on ES. 500. The same concept, right? A lower time frame market structure shift is less relevant than a higher time frame PDRA. So always focus on the higher time frame, always. And the second example is BTC, USDT. Right? Boom, boom. And let's look at the power of 3 on the ES chart. Just for practice sake, right?
Romeo, so these were for short-term trades, right? But will you be talking about intraday scalps, things like that?
Very briefly. The main focus is on the logic, right? Because you can apply what's over here on the lower time frame, right? You can apply what's over here. I'll show you one example, right? Which I took myself, and that should give you a guideline to what to look for, right? Just a helper, as you know. All the information I'm giving you is a complement to what good old ICT is doing, right? The only new things you might see are, for example, the lower time frame shift versus the higher time frame PDRA. There is nobody who said that, right? Shift is less relevant than a valid higher time frame PDRA, right? And when you see a key level being banged more than once, if it's a second time, don't be afraid. Right? It's either a failure swing or a turtle soup. These are details of price, which you will get once you get used to them. So, weekly open. Weekly close. We're digging into, now look at this, notice this thing right here. Accumulation, right? Manipulation, distribution. Down here. So weekly open, it rallies, expected decline, right? At least until New York of the week. We're digging into a weekly FVG on a Wednesday, right? So the higher time frame is bullish and the lower time frame is bearish. Which one do we trust? We trust the higher time frame, not the lower time frame, because a lower time frame market structure shift is less relevant than a higher time frame PDRA. Now, pretty much the same thing, nothing different. So that is foundation done, and smart versus dumb money, a heavy one, right? And the higher time repeat array, done. The lighter ones, at least for now, are the market profiles, and that's it. It's pretty much the ranges and trends, right? So it has taken more than 4 hours. It has taken more than 4 hours, but that's fine. I don't mind. The important thing is that the information reaches you, right? So.
Hey, there's a question from
I don't think
Sahil.
you. Oh, sorry. Go ahead.
Yeah.
You don't think
He's
I what?
asked. Sorry.
You don't think what? It cut off, my friend. You said you
Go
don't
ahead,
think what?
Robin.
Okay, yeah. Romy, it's Robin here. I have a question from a guy called Sahil. He's not able to unmute himself. So he's asked, could you please ask when a market structure shift would be important for order flow and when it wouldn't be?
Say that again.
When a market structure shift would be important for order flow and when it wouldn't be.
When is market structure shift important for order flow?
Mm-hmm.
Again, you're telling me to teach you something that ICT has taught you, right? But I'll give you my opinion on the shift, right? Which is what I gave you just now. If you've been taking notes, and what I've said already is more than enough, which is, first of all, it's a logic, not a pattern, right? As we saw in Bitcoin, as you'll see every single day on every single time frame. It's a high. It's an accumulation, of course. It's a false bottom, right? A false breakout, enigma pattern. A dig deep. So they think the bottom is in. A dig deep inside of this low, tripping them up. And then a true breakout, which does not allow you to participate. For Turtle Soup, this is crucial. If you're trading Turtle Soups, which I'll show you how to trade those two things, which I did right there, right? For Turtle Soups, this is crucial, right? A true breakout does not allow you to participate. Breakout. So entry 1 is over here. Entry 2 is over here. Entry 3 is a deep retracement. Forms an SMT over here and rallies. Right? So this is the market structure shift as seen over there. Right? So it's a logic, not a pattern. Some of you will see this regardless of how many times I say it's a logic, you'll still see it as a pattern. I can't help you. I can't help you. Some people are just destined to fail, right? But those who observe, it is a logic, not a pattern, and most of the time, you'll have this to filter out the patterns. The higher time frame PDRA is a filter for patterns. Right? Now, entry techniques. Before that, of course, we have the market profiles, trends, and ranges, which is the bread and butter and the meat of it all. So this gives you a strong foundation to trust. All right. Now, do you guys want to break or do you want to continue? I've been talking for 6 hours plus. I can go on for 10 more hours.
I would like a break.
I don't mind. All right. You're watching, huh? I'm not talking.
I think we have a break.
If you want to break, you
Yeah,
want to
we
break.
should take a break.
It looks like we might finish it today. What do you guys think? Including
More than
the
happy
entry
to
technique.
continue, mate.
Including the entry technique at the end, right?
I'd like a few minutes to you know,
No, no,
get in a good
we take a
headspace.
breather. We take a breather, all right? Digest the information, like 10 minutes, 15 minutes, and then we continue with the profiles and the entry technique. What do you think?
I think that
I'm
sounds
fine
like a
with
good
that.
idea.
Good.
All right, excellent.
And during the meantime, could you add people who really want to speak, because they've been DMing me this whole entire time, and I couldn't even pay attention.
You become the spokesperson, huh?
I guess so.
All right. Well, you're a charter, so you probably already know the importance of a higher time frame PD array. The
Hey,
juicy stuff is now.
I'm just gonna say, even if you're a charter member, that all it means is you just pay for the mentorship. That's it. Not all charter members
Exactly.
are proficient.
I know that.
Trust me, there's a lot of people who's struggling.
Exactly, because they struggling either financially or with the charts, right? Because they don't have the model. That's the issue. Is when you're struggling, it's only because you don't know what you don't know what you're looking for. Right? You just know everything. Shift breaker, order block FVG, breaker FVG, order block. What's your model? I don't know. A breaker FVG, order block shift, right? Bots. You got to think. You got to pick a model and stick with it. So there's a 10-minute break for you, and we continue. I did not expect to give it all at once, but it is what it is.
I have a question.
Tell me.
Yeah, how would you measure the high and the low on lower time frame, like an hour or 15 minutes?
How would you measure the higher time frame?
Exact same
How
way.
do you? Yes. Now on the lower time
Like-
frame, you can do the same thing. You can do the same exact thing.
Last 20 candles.
Last
40
20,
last.
40, and 60, right? But the data, me personally, I use them on the higher time frame, right? You can use them on the lower time frame. You can use SMT on the 15-second time frame. You know that, right? You can use whatever you want, wherever you want. It's not a matter of can I do it. You can do many things. You can trade a 5-minute candle profile with a 1-second candle entry, right? You can do that.
Yeah.
But what's my style is one shot, one kill, right? So I can do many things. I can scalp all day long, but I choose not to, right? Not personality, because you can trade whatever you want. Just my lifestyle, the way I live, the real life work that I have, right? My real life doesn't allow me to go and count 20 candles back on the lower time frame, but it is all fractal. Everything is fractal. Everything is a fractal. So every single thing I said just now, which applies to the higher time frame, is applicable to the lower time frame, and you can see right now in front of you, right? You can see right now. Same thing. Count back 20, 40, 60 candles. Counting, it has a bad rep. Same thing. Count back. 20, 40, 60. Lower high, great. Dealing range, right? The fib measurement range. Lower high, low, right? The swing high, right? Visually, just a bare bones, just a look, right? This comes with intuition. Lower high, low. And then you blend that, because you can say, you know what, Romeo, what about this? You would have been caught over here, right? Yes, that's why we have the PD array, the weekly FVGs over there, to filter out a false bottom. Write this one down too. False bottoms and false tops are filtered out with a higher time frame PD array. Right? This is the key. This is the birth of every single turtle soup trade you've seen me call and take. Every single one you've seen, the ones that made you come and pay me money to talk, right? I took them using a higher time frame PD array every single time.
But
When I don't
like,
pay attention to the higher time frame,
right, yeah,
fucks up.
go on, please.
Tell me.
I was going to say that like ICT teaches that you need to have a set of time frames in which you have 3 time frames. So my time frame could be different from yours, right? So can we trust, like, if my higher time frame is 1 hour or 4 hour?
What does this
can
mean?
I trust that
Okay.
PDR?
Your name is Kaif?
Yeah.
All right. You can trust it. I'll tell you how. You can trust the higher time frame by understanding what a higher time frame means. What is higher time frame?
Time frame that is higher than the current one.
That's it. It's that simple. And you have that video again, as I've mentioned. I'm a complement, right? A supplement to ICT. He has taught me 90% of what I know, right?
Yeah.
Most of it. The rest of it is all Wyckoff, a bit of GAN, right? Classic technical analysis. That I still use some of them conceptually. The things that work within them, I use them till this day. So I'm not like your typical ICT trader, right? Who doesn't use anything outside of ICT, who never knew the markets except within the lens of ICT, right? That's not me.
Hey Romeo,
So, but,
Robin here. Yeah. When you
question.
when you
Tell
show
me,
the
what's up?
weekly time frame, yeah, I'm audible.
Cred că
I
mai
can hear
durează
you
o oră
guys.
jumate.
Yeah. When you show the weekly profile, right? You said that there are 4 weeks. Week 2 or week 3 being the manipulation, right? So the same thing on a 4-hour candle gives us the 1 a.m. to 5 a.m. London kill zone.
The same exact
Dorin,
thing.
pleca Zeno. Ce să facă el?
And that is the reason you focus on 3 to 5.
Correct.
Okay. But my question is, why 3 to 5 but not 2 to 4?
I mean, you can 2 to 4. I just find more setups in 3 to 5. But
Okay.
the classic, the way IC teaches it, right? He teaches it to look for the Judas at 2, right?
Right.
2 a.m.
Mhm.
London. Only, not randomly. Again, another misconception, which is just randomly short any rally. When you're expecting lower prices, right?
Mhm.
When you're expecting a classic sell or buy candle, what are the time frame? Because it's fractal. When you're expecting a classic sell or buy candle, then in that case, that is when you expect a rally, if you're bearish, and then a decline, right? You're using the opening price as a reference point, overbought and oversold. Right? That's what you're doing.
Okay. Okay.
No pattern. Your pattern is in the wick, as you said. Good old man. I'm positioning myself in the wick. That's what I'm doing.
Okay. And regarding the same question, if I go to the 1 hour and treat that as a 4-hour candle, the macros that ICT gave, the 1050 to the XX50 to XX10, they are the closing and the opening of the hourly before and the next candles, right?
Yes. That is correct.
Okay. Okay. So that is the significance of those macros.
Yep. It's all if you sit down, if you really want to dig in, if you sit down and reverse engineer the open, high, low, and close of the candles, right? What time certain swing points form, right? There's always the same time window, right? Where highs and lows form. The same time where liquidity purges happen, right? As we saw in Bitcoin, right? At time, the London session of the monthly candle, right? Over here's Wednesday, a typical power of 3, right? So if you sit down and dig deep into it yourself, you'll find some pretty cool stuff.
Eu sunt moderator aici.
Me personally,
Gagiul ăsta a luat
I found some stuff, but
$127
it's noise to me. Why? Because it's too low of a time frame for my lifestyle.
€1.330.000 pentru o zi. de 6 ore.
Noted.
Să dai seama ce înseamnă.
So
Știu
I think
cum mai
it's wiser to just do what he
Dar
did,
eu învăț, știu să fac
what he
lucrul ăsta,
taught to do,
nu.
which is
Ideea este că el are o
buy
audiență foarte mare.
in a
cum am
bullish
eu
week,
pagina, așa e și
Bible
făcut
opening
pe
price,
Twitter, știi?
Dar tu poți să
Și
faci
soluția-
asta, dacă tu te pricepi la asta și
And
tu
a
cu
bullish
data
day,
coaching poți să faci și cu asta.
where you expect
Deci eu ar trebui
bullish,
să-mi
Foarte
ar trebui
tare.
să-mi
A bullish
registrez trade-urile,
candle
să le
print.
pun.
you buy below the
Engleză
opening
și-
price, and that's
Deci
it.
a luat
So keep it simple.
127, trebuia să fie împărțit în 4
Okay.
săptămâni și a
And
mers așa
what
de
do you
repede că
mean by
am
reverse
apucat pe mine
engineering?
într-o zi.
I know it's a noob question, but
127.
Reverse engineering is simply
Nu, asta mi se pare ok.
Dissecting the
Să
charts.
faci oameni și pagini.
you won't learn from social
Da, da.
media.
Am muncit
You
un an
won't
de zile
learn
să pun
from
audiențe.
online
Bum.
people, right?
Și
You
acum
learn
pot să fac în
from
fiecare săptămână
not
chestia
earn.
asta.
You'll learn earnings afterwards. Not at the beginning.
Yeah.
You will learn from one person showing you the way, not teaching you, just pointing towards the direction,
Da.
and you will go and
Și nu
study it
români, asta e
yourself.
ideea.
Da.
Sunt
That's the way you learn.
americani, sunt africani.
Care comentează prostii.
Right.
se leagă de-
Thanks.
If you expect to be spoon fed, right, you will never learn. Never.
noted.
Because then you will rely on his spoon feeding. right?
Să ia-
Right.
So the best way to learn, even turtle soup, whatever I was talking about for the past 3, 4, 5 hours. The best way to learn is, which is an important point, right? Because it's a lot of talk, it's a lot of concepts. Each one is applicable as a model by itself, but the best way to learn is through
By doing it ourselves.
no, is by watching and predicting the candles print live. I saw questions saying, "What is tape reading?" Is watching. Of course, the volume fellas, the order flow fellas, they have another opinion, but I don't care. Tape reading for me is predicting the candles, watching them live, right? Just and noting their behavior at certain times of day, is a week, and so on. So you look at them, how they react at certain highs and lows, at certain PD arrays, at certain times.
And does news matter towards these times? For instance, I see many times like the reversal of the manipulation happens at either 8:30 or 10 a.m. and that's because of news. Do you
The news
factor that?
matters only for a momentary reaction on the lower time frame, right? So that's why when you trade news, if you're into that, right? Everyone has some weird kink they're into. If you're into trading news, then you trade the news after the move has started, right? Not at the beginning of the move, because you're risking getting stopped out unless you use a higher time repeat array entry, right? Or you really know what you're doing, then you can do whatever you want. But that's it. That's it.
I guess it's
These kind of
more
noob
like
questions, by the way. These kind of noob questions, by the way. Huh? You guys are
No,
supposed
no,
to be
I guess-
intermediate, proficient.
no. I mean
What is
like my real
Uh-huh.
question is more like do you look at the exact minute? Like, does that factor into your model?
C. What's your name? Let me go check.
Hopium again.
Hopium again. There you go.
Yep.
Right. All right, Hopium. If you're really dialed in, right, which is you go to a. I'm not supposed to. If you're really dialed in, right, you can catch tops and bottoms, keeping in mind the monthly, weekly, daily, and the daily profile in mind. If you're really dialed in, then you can catch swing points, right? Because swing points form at certain points in time. The highs and lows of the days of the week, of the daily candles, the weekly candles, they all form at certain points in time. So if you're really dialed in, you can do some pretty amazing stuff. You can snipe some pretty good stuff.
Yeah,
But
I've
again,
been.
this all happens all on off social media. If there's one recommendation I would give to everybody who is learning, right? if you're already know what you're doing, you can do whatever you want. But even for them, like social media is is a distraction, especially for learning traders. It is who don't have their model yet. It is a distraction because you're comparing yourself to others. You're just you're not focusing on the main thing, which is tape reading and charts. You're too concerned with what others are doing, how well he's doing, what's how many RR trades did he catch today? Well, how many 1 to 500 RR trades did he catch? The master, for example, right? Or whatever goofball is doing, whatever. Right. So the best way to learn, in my opinion, is tape reading it and getting familiar with it, making it your friend.
I have a
Yeah,
question.
but familiarizing yourself with the charts, with the turtle soup, with how it happens, with at the high and the low, what happens at the high and the low, right? What happens over here? You go up here on the lower time frame, you look, and that will be discussed in entry techniques. Tell me, the break's over and I'm still talking. Tell me, what's up?
No. Okay.
Let's say, for example, the turtle soup is about to happen. Does it always have to touch or react from the HTF PDF array, or is it okay if it is slightly off from the level, key level?
It will always dig into a key level.
But if it is the
If it
case,
It doesn't.
I
dig into
observed
key
your
level.
Ethereum 4 hours.
My Ethereum what?
If it is the case, you said it has to always dig into the PDF array, right? So if it is the case,
Almost
I observed your Ethereum 4 hours chart. Did not dig into the weekly FVG, and you were confident
because one of the reasons that gaps are left unfilled is turtle soup, right? We saw that on GBP. If you remember the analysis I posted, right, for GBP, gorgeous, just gorgeous. And we'll go through a bunch of just to revise the importance of the higher time frame right now, as soon as the break's over, which is now. So right here on GU, all right, on GU weekly. Of course, as we know, price is price. It doesn't matter the chart. Price is price. The only difference is some markets are consolidating and some are expanding. You just pick the expanding ones. So right here, you have this higher time frame gap, right? Everyone was expecting it to dig into it. Yes or no? Probably, right? But a turtle soup will stop a gap from filling, especially if there's a lower time frame shift, right? A proper shift in structure, from a proper shift in delivery from bearish to bullish, then you can expect the gap to be left unfilled. And that answers your question, my friend.
When you
Now,
said
just to-
shift in delivery, is that the
1 second before I continue with the rest of it. Let me dig into your minds what I'm looking for in my turtle soups, right? And from now on, my friends, you guys need to 1 second. Let me send you the some pictures of what I look for, right? Nothing new. It's simply the higher time. It's simply where does turtle soup occur, right? Where does turtle soup occur? So the break is over. I'm guessing we're good to go. Are you guys ready?
Bro, me,
Good.
Yes.
I gotta say this right quick. Everyone who's DMing me, please. I asked him twice already.
Okay, listen. Whoever has the mic now has the mic, right? FAQs. I'll open either the chat temporarily for FAQs, so that I can see the most common question and answer it collectively, right? Because it's inefficient and it's not going to help anyone if we go try and answer everyone individually, right? So collective answers, we're too many people for that. If we were like 10, 20 people, then maybe. But we're 1,000 people, though. So collectively answering the questions is going to be what we are going to do after the sessions are over, right? I'm not even tired, not even a fucking bit. So I had
Excuse me?
something in mind. Tell me.
Can I ask a question?
If it's interesting, yes, sure. Tell me.
Okay, earlier you said that you're going to show us when a support level fails, go to the higher time frame. If a 5-minute support PDRA fails, go to the 15 minute, and so on.
Yep.
Can you please do
That is correct.
once?
What are you saying?
Can you please show that once? An example of that.
Here's an example right now on ES. You don't need to look far, my friend, to see the concepts working. Right? So this is something I had paid attention to I had called on Twitter as well, right? Which is, I said, if this daily order block fails, right? Focus. If this daily order block fails as the weekly low on Tuesday, then I'm waiting for it in the weekly FVG, right? So the daily order block failed. We closed beneath the mean threshold. So we can expect the weekly FVG to be the next support, and it did. Yes or no?
Yes.
That's it. So the daily PDRA is failing, which means we go straight to the weekly FVG, and it held. Yes or no? Do you see the visualization of the concept?
Yeah, I do.
If this fails, you go to this one. So are we ready to go into market profiles? Because I'm ready.
Since you talked about GBP, one thing I noticed was that the reason why price went down one more time and didn't fill in the weekly gap was because it was the CE of the monthly BISI, right?
That is another reason.
Is
Higher
that
time
another
frame
reason?
gaps. That's another reason, which is higher time frame gaps. Right? They stop lower time frame gaps from filling. I'm telling you a lot of stuff, and if you're not paying
And I
attention,
think-
you'll simply ignore it.
And I think what you said before was that if price almost reaches the CE like it did before, but hasn't yet, you expect it to soup that low, right? And touch the CE, and then that's when the real rally begins.
50% of any price leg is a good place to look for turtle soup. Write that down and enjoy, right? 50% of any range is a place where I expect a continuation turtle soup. Right? That keyboard is too loud. That keyboard is way too loud, right? So 50% of any price leg, any range is where I expect a continuation turtle soup to happen. So now the differences between the turtle soup. I saw some goofball on Twitter, copy one of my tweets on turtle soup, which I'll be showing you right now, right? So and after that, of course, we're going to go through the market profiles real quick. We won't go as in depth as I wished because the time is going tight, right? But that's fine.
Deja 4 ore și am mai vorbit 3 înainte și n-am
You'll
prins.
get more than
Au început mai devreme.
what's needed, much more.
Am dormit și n-am prins anul.
And I hope someone's recording. It's a lot longer than expected. I've been here since 7:30 a.m. So it's more than 4. It's more than 6 hours. But that's fine. The important thing is someone's recording. Is someone recording the whole thing?
Liniște un pic.
I have a recording of 4 hours, 23 minutes going on as of now.
Since
Yes.
10, right?
I have also recorded this.
Now, to everyone sending me messages saying, you don't love me, please let me talk. I don't give a shit about anyone, right? I'm here to teach. So it's nothing personal, right? I'm here to display something. So it's not about you, right? It's not about you. It's not about you as an individual person. It's about the collective environment of 1,000 people. I can't physically allow each person to talk because that would take all day long and it would not be efficient, right? Neither would it be useful. So collective answering is what I'm going to do, all right? So it's not personal. I am never personal to anyone, right? It's about the idea. Think. So, that being said, yes, Chris, it's a long catch up, my friend. I've been here since 7:30 a.m. And yes, the recording will be available. Listen, one of you, this guy called Rip, I'm reading his DM right now. Count 4 hours backwards because we started at 10:10, right? My time, Spanish time. 10:10, 11, 12, 1, 2. All right, so 4 hours over right now. So someone should have 4 hours of recording right now, right?
Yes, I do.
All right. So excellent. If you have one, then excellent, and good job. You might get an extra tip on how to soup turtles. So right now, we go into market profiles and finally the entry technique, which is a whole, which includes the entry, stop loss, and targets. Right? Now, I wish I could go as in depth, but my time is running tight, so I expect to be done by 3:15 Spanish time, more or less. Right? 3:15 Spanish time. Right?
Then how about we do it next weekend?
It's 1 hour left anyway, right? So we're done already. We're done from 7 to, we're done with 6 hours plus already. So 1 hour extra is what? So we finish now, and then we do the FAQs. And next weekend, I'll give you all an extra hour to answer the FAQs. How does that sound?
More than fair, mate.
So we finish now, and then I'll let you collectively send your questions about the stuff I discussed, right? And I'll answer every single valid, interesting, collective question, right? So think before you ask. Don't ask obvious questions. So, market profiles, which is an essential part of Turtle Soup, which is why I could have skipped this, but I'm not going to skip it, right? Because it's essential to not get caught in a fake Turtle Soup, right? In a fake false breakout. That's a shame. So, we have market profiles, as I gave a rough outline of. We have trending markets and a ranging market, right? Trending markets, and we have ranging markets. Now, before I continue, right? A lot of you are probably sleeping by now. I hope not, for your own good, right? So I hope everyone's active and watching and taking notes, because the best way to learn is to actively engage, whether it's writing or talking, right? That's the best way to learn something, or even revise, not even learn, right? So the best way to revise and learn something is to actively engage in it. Plus you have this recording later on to review as much as you want. It is yours. And I would hope it stays in the group, right? I would hope it stays within the walls of this group. Even if it does somehow find a way partially outside, then it's too dense anyway, so nobody's gonna give a shit, right? But I hope that you value the knowledge, the environment, and respect the money you paid, the time you invested, and my throat, which has been talking for like 7 hours, right? You probably won't give a shit anyway and do it anyway, you know? But that is my, that's what I can say about it. That's what I can do about it. So, trending markets and ranging markets, all right? What is a trending market? Anyone? Answers.
In a bullish trending market, highs are being taken constantly.
Highs are being taken? Nope.
Expansion.
As we all know, I look at the market from highs and lows, right? Perspective of highs and lows. I don't look at, but I do look at order flow, right? Order blocks, FVGs, which one is being respected, which one is being broken. I'll show you an intraday example as well, just so, because I know that the ICT community is a bunch of scalpers gambling the 1 minute chart, which can be done. But if you can't even call the higher time frame correctly, then you have no business trading the lower time frame, right? That's a note for all of you. You're trading the lower time frame without first mastering the higher time frame, which is why he also, even in his mentorship in the core content, he teaches the higher time frame first, and the last thing they talk about is the lower time frame. All right. So what is an uptrend, my friends? Someone said highs being taken. That's incorrect.
Well, not taken, but broken. Like broken.
Very good. Excellent.
Violently.
We're gonna go and do some good old hindsight, right? Let's go and do some good old hindsight for once. I think I've earned the right to do some hindsight, which is not a hindsight because I lived it in the moment, but it's hindsight to you guys because you did not witness it. So, but of course, as we know, history of the charts is a gold mine. History of price action is a gold mine, and it repeats itself for those who have eyes to see. So, a rough depiction of an uptrend. What classic analysis teaches you is higher highs, higher lows, right? Prices climbing, higher highs, higher lows, correct? What actually happens is, I mean, you've probably never seen price do this in your life, right? And go and move in this fashion, never. What happens is this. And if you say you did, you're lying. What happens is this. Let's include that one. What happens is rejecting highs and rejecting lows and breaking highs while creating higher highs and higher lows. Rejecting lows, breaking highs. Rejecting lows, breaking highs. And what is a downtrend?
Breaking lows, rejecting highs.
Excellent. Beautiful. This is the recipe, as you'll see right now. Rejecting a high and breaking lows, right? So then we flip from breaking highs, rejecting lows, to breaking lows and rejecting highs. Right, so this is what's meant by market profiles, and this is a super important part of Turtle Soup. So there is so I can talk for days, but I'll try and filter out the information. So rejecting lows, breaking highs, while creating higher highs and higher lows. This is Turtle Soup. Now, as we know, markets move in expansions and consolidations, Correct? Do you disagree? Anyone? Nope. You better not. Consolidations and expansions. Right? What is the meaning of consolidation and what is the meaning of an expansion? Someone. Let's start with the consolidation. What is the meaning of a consolidation? Because we have to be able to explain every single price leg in price, right? With a logic and a narrative. So what's the meaning of a
consolidation? Pricing. Consolidation means. So in a consolidation, price actually the market builds up liquidity on both sides of the market.
Right. The market makers control the market. They have a job to generate interest in price, to suck in participants, right? The way they do this is through the power of three, which is not a new concept. And for the neophytes who think it's an ICT created concept, go study a bit more. It is an old economic concept, right? So go and read some books, right? Accumulation, manipulation, right? Distribution. Which again, I repeat, is not an ICT concept. It is one he popularized, like most of his stuff, right? Props to him. He's the mentor. Thank you, ICT, right? ICT, thank you very much. You're the mentor of the mentors. You're the best. But he did not create these concepts. Know your history, all of you, right? Now, he did refine them and combine them in one place, which is good. So good job on him. Nobody else did that, right? Gann, Wyckoff, supply and demand. He combined them all in one place, right? And made them popular. So without him, none of us would be here. I wouldn't be here. I wouldn't know this stuff, right? But know the history of what you're studying. Don't just blindly follow. Think and know the history. So, all that too. Explain the power of three. Accumulation, manipulation, and distribution. Now, what's happening over here in this pattern? There's always the market makers fucking someone over and somebody getting fucked over, right? Accumulation is generating interest on both ends of a range, a clear defined range. Now, this is where turtle soup is cooked, so pay attention, right? A clear defined range, it breaks through the range, grabs the liquidity, accumulates the liquidity from above these highs in order to distribute them below these lows, right? And then, of course, expansion in order to sucker in more participants. So they're generating interest on both ends. So breakout traders are looking to buy and sell a breakout, right? But breakouts don't occur the way that turtle traders think. They occur in a specific logic and pattern at a certain key level at a certain time. You combine them all together. You don't just blindly follow a pattern. Let me drink some water. Bismillah. You guys can take a break too. Have a drink or something for 1 second. So there's a logic and a pattern behind every move, and a pattern behind every price move. You should be able to explain to me, what's this price move do? What's the narrative and the context and the bias? Based on what? Right? You can't just blindly say shift, order block, FVG. Why? What is each PD array? Maybe in the future, I'll be dissecting. I've dissected the order block, right? I'll be dissecting each PD array and the logic behind each PD array, right? I've done the FVG and the order block, and maybe the rest later on. So, accumulation, manipulation, distribution. The purpose of a range is to accumulate and generate interest on both ends of the market, correct? And then trip one end of the range to the other, right? We'll see live examples, don't worry, for those of you who are critical of drawings. But the way to learn, for those of you who have, who may have a slight subconscious issue, the way to learn is to first try the most basic, concept and then build on it later on, right? You can't go and apply the most advanced concept without understanding the basic one. You can't go and trade a 1 minute chart blindly without knowing the higher time frame. So range, the purpose is to accumulate, generate interest, manipulate, and then distribute, right? That's a fucked up drawing. So what is an uptrend, my friends? Describe to me the logic of an uptrend. The mic is yours. There's around 20 people at the mic.
Price respecting
Consolidation,
British
expansion,
PDAs.
consolidation, expansion.
One by one. One by one.
I would say
Price is-
consolidation. Sorry, you can go ahead.
It's okay, man. Go.
Okay, I would say it's consolidation, expansion, in that phase. That's a trending market.
All right.
Consolidation, expansion, and replacement.
No.
Yeah. Any other answers?
In trending market, if it is bullish, it will be breaking highs and rejecting lows. If it is bearish, it will be breaking lows and rejecting highs.
What does that mean?
If I may. So in an uptrend, even though price is moving up, people will still be protecting their positions at swing lows. So before
Who's people?
Dumb money.
All right.
Right. So they're always protecting and moving their stop loss up. So what the smart money will do is they'll sweep those lows to grab more liquidity and knock people off their positions before moving in the true direction of order flow.
Right.
And that's what keeps repeating until they're net short again.
Very good. That's the closest answer, right? Don't repeat patterns. Repeat a logic. And if you're wrong, dissect the logic, right? And you realize it's the same logic, which is repeating again and again and again. It's simply it's a matter of you being in sync or not, right? Because once you know the logic, once you know price, all of you, once you know price, then after that, it's simply a matter of being in sync or not, because you know how price moves, which is why the foundation was all about RR and the irrelevance, pretty much, of an edge, right? And then the next 7 hours talking about an edge, right? We have to be in the correct frame of mind. You have to think correctly. So, you are correct. Highs and lows can indicate to you whether smart money is net short or net long, simply by looking at highs and lows, rejecting highs, breaking lows, right? Example, we'll see at least 3 examples. Some old, some recent, more recent. So what's happening here to this low? What is this? What's happening here?
Rejection.
What's happening to this high?
Breaking.
What's happening to this high? Broken or rejected?
Broken, it's closed above.
Broken.
Very good. Again, a characteristic of a true breakout is an initial rejection followed by an expansion. That's a real breakout. That's how you classify whether it's a good retest, quote unquote, candidate for a continuation play, right? What happened to this low here?
Rejecting.
Right, so rejecting highs, right? And breaking lows. What happened to this low over here? This low. FVGs are lows, yes or no? FVGs on the lower time frame are a swing low with liquidity below it. So what happened to this low? Broken or rejected?
Rejected.
Rejected.
There was a pause, huh? Rejection is the refusal to expand above a high or below a low, whether it's instant rejection or consolidation below the low or above the high, right? And because price is breaking highs anyway, we expect it to continue. Discount low, right? Soup, boom. What happened to the high? Broken. What happened to the other high? Broken, right? Breaking highs, rejecting lows. Why did you choose this high, right? Choose the logical high, which will have liquidity beneath it and above it, right? You can't just choose any random high and low. You can't just go and choose this one, right? But you can to target this low as a short-term trade, but as an overall market profiling, you choose the obvious, as you'll see, swing highs and lows, right? So what is this? Tells you that smart money is net long, right? What does that mean? That means they're accumulating below lows and throwing the positions above highs. What does it mean when they don't stop at this high? It means their position is so large that they need to go to an even bigger liquidity pool at a higher high, right? That is the logic of an uptrend, the explanation of an uptrend. As I said, every single thing is explainable. So, accumulating, pushing higher. Breaking highs, meaning they have a large position, we target the imbalances and highs, right? Turtle soup, right here. Good old turtle soup. Turtle soup. So this is a trend continuation turtle soup, right? The rule says in an uptrend where we are breaking highs and rejecting lows, we buy the dumps below the lows as turtle soup. All right? Now, in a downtrend, we sell the pops above a high as turtle soup. All right? We sell the pops. Any bullish pop above a high, turtle soup at once. Why? Turtle soup. So, breaking highs, rejecting lows, turtle soup, turtle soup, turtle soup, right? And then finally, we reach a long-term liquidity pool, which is the previous 6-month high. And over there, we start rejecting the high. So all during these 6 months, not a single high was rejected. Think about it. All during this uptrend, not a single high was rejected. And you can go and double check me on that. As soon as we had the first rejected high, when I told you I think in the market in terms of highs and lows, this is what I'm saying. As soon as we had the first rejected high and we broke the first swing low, then it was down from there. We broke the high, the low that broke the high, which means it indicates that smart money is not interested in longs anymore. They were refusing to accumulate, to expand below. They're protecting their positions, right? They have positions which they want to distribute to a higher high. To accumulate, distribute, right? Finally, they reject the high. suckering in people in this false breakout, As we know, the previous week high, previous week's high, previous month's high, previous day high, right? These are all liquidity pools which offer valid bounces, short-term for you scalpers in there, short-term bounces, right? Previous candles highs in general. So liquidity pools, right? You have an old liquidity pool being rejected and now broken. So now we went from breaking highs and rejecting lows to breaking lows and rejecting highs. And that is the logic of a market structure shift. So think properly. They no longer have interest in protecting lows after a long 4 or 5 month uptrend. They broke it, which means you can safely assume after taking out a liquidity pool, turtle soup, right? So you can safely assume that they are net short now. And any bullish pop above a high is turtle soup. Turtle soup right here. Turtle soup right here. And here comes a quiz. Here comes a trick question. So, what do you see over here? The mic is yours. Then you're going to ask some other people. Maybe you got some interesting folks hanging around. So what do you see? Krishna, let me allow this guy in. Allowed to speak. What do you see over there?
Price broke highs.
Speak, raise your hand and I'll let you speak. Don't DM the poor guy. Or just raise your hand. And you'll have answers. You'll have a chance to ask questions anyway afterwards, right? So don't worry. You will have a chance to answer the questions anyway. So what's happening here? Up here. And before you say that, what do you see up here? As we speak right now, what do you see? All of you, what do you see? Focus and be honest with yourselves. What do you see?
Market structure shift.
Beautiful. Excellent. Anyone else?
Yeah, price broke highs, a market structure shift, and a fair value gap.
So bullish, right?
Correct, yeah. Should be with that
Bullish?
logic, yeah.
Bullish targeting these equal highs, right? Bullish buy now. Where's your stop loss here? Because when you think about price, here's another thing. When you think about price and trade idea, always think in a stop loss, right? Because otherwise it's useless. You're pretty much not trading. So when you say price is going up there, always have an invalidation in your mind, whether mentally or written down. Okay, that's practice for execution, practice for stop loss placement. So we were saying, where's the stop loss right now? Where is it? Down here?
It shouldn't be anywhere near that.
Here? Good.
We're trying to buy at the high end of a range and into a weekly order block.
No. That's you right now. But I'm saying, what does the average... What do most of you see, if you're being honest with yourself right now? Someone said a break in...
okay, just on
break
this chart should be below the bullish order block to the left. A safe stop loss placement.
This is a breaker. What do you mean? This is a breaker.
Oh, actually, yes.
High, low.
Yeah.
Low, high. So it's a breaker. Well, why are you bearish? Let me dissect your thought right now. Come here. Why are you bearish over here?
Yeah, without further information, you would be bullish, clearly.
All right. So anyone else? So you'd be bullish because of the pattern, right? Pattern, bullish. Anyone else has an answer as to what is this?
No. As price taking lows and breaking highs on a previous, I think it's on March
All right. So,
No.
are we breaking highs?
Wait.
And are we rejecting lows?
No.
Yeah, we
think,
are rejecting lows. Sorry.
Even though there is,
This is the lows.
even though there is a market structure shift, we have to always look whether the price has tapped into the higher time frame liquidity pool. Then we can confirm that the market
Alright.
structure break is
All right.
valid.
First of all, we're above a liquidity pool. What's the rule say? It says never buy high and never sell low. That's rule number 1. Right? Every single one of you who lived this live would have considered at least a shift in structure, right? At least considered it, right? Just to keep you guys happy, right? You'd have considered a shift in structure with this breaker and FEG, whatever. But rule number 1 would save you. Rule number 1 would have kept you safe from this wreck, right? Which is never buy high, never sell low, buy low, sell high. Now, you blend that in. First of all, let's measure. How do you measure high and low? How do you measure high and low?
IPDA.
And
IPDA.
the dealing range and the expansion leg, right? Just a visual look. The two important ones are these two for me, right? 1 and 2 is more important than not iPad, IPDA. So count back 20, 40, 60 candles. Are we high or low right now? If you count back these candles.
We are in the high.
Exactly. 20-day high. Right. 40-day high. 60-day high. We're high. Now, dealing range, high or low? Are we high or low?
High.
All right. The expansion leg, the swing low. Are we just visually, roughly? Are we high or low? So you have roughly, and you have a measurable, quantifiable way, right? So we're high in all 3 ways, right? Now, if you're in doubt, because obviously price doesn't look the same, it looks similar, but not the same all the time. So if you're in doubt, then always, what do? When in doubt,
Stay in the higher time frame.
when in doubt, zoom out. Right? So delete all of this shit. One week. Now, what do you see now? Are you still bullish on a shift in structure? I draw this, and it's in my mind. I don't need to draw it, just for it's for you guys. So, what do you see here? And shout out to Day. He was here to call this one live. So, we were saying, are you bullish or bearish here?
Bearish.
Bearish.
All right.
Yeah, bearish, clear as day.
Why? Clear as day now, right?
Yes, always with a higher
Lows.
higher time frame.
Lows, and now we have a bullish pop above a high. Plus, you have this order block, clear as day, right? As you said. So, if you're still in doubt, zoom out even more. Go to the monthly. What does the monthly say now? Up here. Bullish or bearish?
Bear.
The monthly candles are data ranges.
I wouldn't trade this.
Then you'd be wrong. Because it's digging into a monthly FVG, right? And a weekly order block while pushing above a high. And as we said, the rules of the market profiles are when there's a bullish pop above a high, you go and validate the bullish pop with a higher time frame PDRA, and you smack it back down, right? So you have the higher monthly, bearish,
And
So if
this,
you wouldn't trade this, you don't. It's because you don't understand price in this situation, right? Who was that? Who said you wouldn't trade it? Who was it?
FX21.
Nah, come on, man. You should have traded that because it's a clear bearish order flow, right? This order block is broken, right? Let's probe order flow. Let's go and probe the order flow. Order block broken, right? FVG, this FVG over here. This little, show there's an imbalance over there, right? It's a fairly small one, but still. Order block broken, FVG broken. Plus on the weekly, it's a clear as day. Clear as day, pun intended. Clear as day. Downtrend and a market maker sell model. Yes or no? Now look at when I'm employing the market maker sell model. When the logic is right. Right? Is this not UFX21? Is this not a market maker sell model? You tell me. Right?
Yeah.
So the market maker sell model is the draw on liquidity. So when you ask about draw on liquidity, the market maker model is a draw on liquidity. It tells you what to do, right? So we're breaking through bullish PD arrays and we're respecting bearish PD arrays. Yes or no? This FVG, IFN over here, right? We're respecting bearish PD arrays. Why would we not trade it? And we have a bullish we have a bullish pop above a high in a downtrending market. So why would you not trade it?
I'm not saying you're wrong. I'm saying if I was looking at this by myself, yeah.
But I'm saying you're wrong. Because if order flow is bearish, then why aren't you selling? Right? You tell me, am I wrong? If order flow is bearish, then why are you not selling?
If I was looking at this by myself, it would be in the middle of a range, and I would be afraid to trade it. And that's
very
just
good. That is an excellent point you brought up about ranges, but which I agree with, by the way, right? Range trading, which is the next after the trending markets, the ranging markets. Range trading, you never trade in the middle of the range, right? But, however, tell me the reason, by the way. Tell me why don't you trade in the middle of the range? FX21.
It's neutral.
No, why don't you trade in the middle of the range? What are you afraid of?
I'm just not sure.
All right. Any other reason?
That's it.
Because you expect chop, right? In the middle of the range?
Right. And whenever I see he talk about middle of the range, I think that he usually don't do anything. Wait for more information.
For me, the monthly and weekly, right? They're all more than enough. And if you look at the power of 3 candle on the yearly chart as well, right? There's accumulation, Q1, manipulation, and distribution, right? January, February, March, April, right? Started the topping process towards the beginning of April. Then it just tanked, right? Plus the market maker sell model, plus the range high. Talk about ranges, right? What's the target after we purge a range high? FX21.
Internal range liquidity.
And
middle of the range.
The other end of the range, right?
Original consolidation.
I'm sorry.
No. Basic range trading. And you can go back to this, right? When you have a range, which is the next topic, where you push me into it, so whatever. When you have a range, which is my bread and butter, right? So when you said range, you caught my attention, right? You have a range and you purge either end of the range. Then what happens? Generating interest, right? Generating interest up and down. So there's liquidity building up and below, correct?
Correct.
Yeah.
Building. So when you have this liquidity building up and below, and you purge the range low, then all this liquidity you've built during this while is still built up there, right? So the logical target is going to be the range high. So whenever a range low is purged, I have two targets, right? And I have dissected ranges to no end. Target one is the high that caused the purge. Talk about targets, right? And so it's going to be something over here, right? Somewhere over here on the lower time frame. Move this shit. Target two is 50% of the price leg of the range, and target three is the range high always. So when you see a range low being purged, and the range high has not been purged, then you can reasonably anticipate target one 50%, target two range high, right?
Correct.
So based on that logic, right now, right here, purged. Right? I'll show you the logic right now in a live call I made. So you know it's not some hindsight garbage, right? Range high, purged, target one, the low that caused the purge. This is a high quality target, right? There's an extremely high chance that it hits the target. And target two is the 50%, so 2 before 1. And target 3 is the range low. So I'm finding, when I see a clear defined range like this, right? I'm waiting for one end. Have you seen my turtle soup, by the way? Which I call on Twitter. Have you seen the range that I call on Twitter?
For this one?
No. Have you seen the ranges I call on Twitter in general?
I'm not sure which one you're referring to.
So you haven't.
I haven't gone through all of your tweets, to be honest.
All right. I might forward it right now if I find it real quick.
Thank you very much. Thank you very much.
When there's a clear defined range, right? What does that mean? A swing high, swing low, and it's mid range, right? Then I'm waiting for one end of the range to be purged, and then I have a trade ready, right? As soon as you purge the range, I have a trade. That's a system. That's a model for you. That's my bread and butter model, right? Which is range, wait for a purge of one side, and then you have two targets. Target one, 50%. Target one, the low that caused the low or high that caused the purge. Target two is 50%, and target three is the opposing end of the range, based on the logic that the liquidity was built: accumulation, manipulation, distribution. Right? That's what it is. What's a range? A range is accumulation, manipulation, distribution. Right? So we have accumulation here. Accumulation, right? So what are you waiting for now? Over here. Either end to be purged, right? For a trade to form. Accumulation. Now a trade idea has formed. It's presenting itself to us, right?
So at this point, you already know that you're about to enter a trade, right?
I know that I'm going to enter a trade targeting 50 and 1. I'll show you a live call, right? A live example.
Gotcha.
Right now, right? That's what I'm doing. At this point, as you can see, accumulation, manipulation. I'm expecting distribution 1 and 2, right? You blend that with a higher time frame PD arrays. You blend that with time. You blend that with market profiles, and you get a pretty clean read, right? I'll show you right now. Another example. Let's finish with this one first. Right? Accumulation, manipulation, and then distribution. I'm in the trade, right? One done, right? And then, of course, we expect the 50% to be a chop fest, right?
Correct.
And then, of course, a bullish pop above a high in a downtrend. You see how I'm blending market profiles with it? Is to be smack back down. And
hey, Romeo, your cursor is lagging a little bit, so it's hard to see where you're pointing at.
How about now? You see it now?
I don't see a cursor right now. Am I tripping?
Do you see the screen?
Yeah.
I don't see the cursor either.
But
Do you see Bitcoin at the range low?
very lag.
Do you see the Bitcoin? Do you see Bitcoin at range low?
Yes.
That's all that matters, right? Is you know that accumulation, manipulation, distribution. This is a classic range play, right? So price is always in a range, trend, consolidation, expansion. Let's lock this shit once. Lock. Consolidation. Consolidation, expansion, consolidation, expansion, consolidation, small candles, consolidation, expansion, consolidation, and expansion. Always, right? So consolidation, turtle soup, expansion. Power of three. Consolidation, turtle soup, expansion. That's how I see it. Consolidation, turtle soup, expansion. Validating it with market profiles and validating it with higher time for PD arrays, right? So,
hey, is the stream laggy for any of you guys?
No,
it's
probably slow.
It's
no,
fine.
It will be fine on the recording. It will be fine on the recording. It's not lagging on my part.
Gotcha.
Your connection, my friend. So,
but in this case, for the high of Bitcoin, there was no higher time frame PD array, was there?
the higher time frame PD array is the liquidity pool of the past 6 months. When I say PD array, right? Go through the PD array, the matrix, the hierarchy. Find old highs, old lows. Yes or no?
Yes.
That's correct.
Exactly. So old highs and lows, right? That's the way I view the market. Highs and lows, market profiles, and higher time frame PD arrays. That's the combo, right? So that's pretty much this. This was a beautiful range trade, right? This one as well, right? Check this out. A range within a range. Range high, range low. Yes or no? Range high, range low. When you think in the range and the profile, then this is not a shift anymore in your eyes, right? You're in fact bearish up here. You see how the logic changes, the way you think, right? So think in profiles and ranges, right now.
Romeo, but what if, say, like when you were watching the market in November, at that point in time, price was still extremely bullish, right?
What?
In November, when we saw price, wasn't the order flow still extremely bullish? So
no, because order flow changes, my friend, right? Order flow switches at certain points in time and at certain liquidity pools and at certain standard deviations, right? It flips from bullish to bearish or vice versa, right? So it can only be bullish until it's not, right? How to measure that? You have a bunch of tools. One of them is a range high. A range high is, let's write down the rules of range trading. Most of them. Again, buy low, sell high, right? Goes without saying. Buy low, sell high. So buy range low and sell range high, correct? Or if you're not sure, then never buy range high and never sell range low. With exceptions, because when you do this, you're being a breakout trader, right? The only time you can be a breakout trader is when they create a PD array at the range high or low. Write that down, right? The only breakout trade you're allowed to do is when they create a PD array at the high or the low, like this one, right? Range high, range low, right? Apply the rules right now. What happened over here? Accumulation, manipulation, distribution. they gave you a PD array at the high of the range, that's a real breakout. You don't buy the range high, you wait for the retest, right? Is my voice and video clear?
Yes.
Yes.
Right.
Yes, both are clear, mate.
So I hope that answered your question, my friend. More rules of range trading. Never deal with price in the 50% of the range. Right? Another one. When we take never long after a false breakout, never long after, this is for Zlatan. You remember? You asked me. Here's the answer. Never long after a false breakout for range, and never short after a false breakdown for range, because more likely than not, we have changed, we have shifted, whatever you want to call it. We're now trending from bullish to bearish or vice versa, right? Excuse me. So, and of course, the 50% is a very sensitive area. It can be used as support and resistance. There's some other rules, right? Some more deep details. But as an introduction to range trading, this is an excellent one, right? And as I mentioned, those of you who took notes, remember that I said we expect a stop run when? Where? At what? Right? No. We expect a stop run for range. Exactly. And look what happened over here. Exactly at 50%. I'll show you more examples right now, right? But exactly at the 50% of the range, you get a stop run, and it tags, right? So.
Like I still don't see how you could have trusted shorting right at the high of November. Though.
That is why I gave away this. First of all, it's tape reading, right? Because every stop run happens within a deviation. That's how you catch daily highs and lows, right? CBDR. What is CBDR? It's you trying to predict the high or low, right? What is London high of the day? What are you doing? What is London low of the day? You're trying to catch the high and low, not randomly, not just shorting anything, not just coming here. For example, a mistake you might make at the beginning is shorting this high, right? Why is that incorrect? Why is it incorrect to short this high? That's a quiz. Tell me. Turtle soup, right?
Because like in the range, you'd say it's at 50% or kind of in a premium.
And we're breaking highs and rejecting lows. That's the key point. So when we're breaking, and what you did was a mistake, my friend. You mistook a ranging market for a trending market. And that is the biggest challenge, write this down. The biggest challenge as a turtle soup trader is differentiating between ranging markets and trending markets. The only two things that can help you are a higher time frame PD array and chart time with the concept, right? You follow? And again, a depiction of the market maker of the shift. You remember I said a real breakout doesn't allow you to enter over here, right? Shift in structure, break, bearish here, below low, retest, and then continuation, just a side piece. Anyway, we were saying that you trust the high using a higher time frame PD array, using time. That is a key element, which sadly I won't be going through this one, right? Using time, using a higher time frame PD array, and using deviations, right? And chart time. Those are three main things which will help you differentiate. And of course, it goes without saying, the market profiles, right? Those are four main things. Write them down. Be more arranged.
But in a daily time frame, where would you measure the deviation from?
Previous ranges. I'll let you figure out that one. Because time and price are fractal, right? So the same thing you do with an Asian range or a flout or CBDR or whatever, right? You do it on the higher time frames. So the way you trust, here's another one. The way you trust a turtle soup is a higher time frame PDRA. Market profiles, this is crucial. Market profiles, time, and chart time. Time as in the axis, and chart time as in tape reading. So we have reached the limit, but I'm gonna keep going anyway because there's still some stuff left, including the entry. So for the guy who was asking, what's your name, by the way? Who are you?
Hopium.
Hopium. All right, Hopium. That's why I said we have 3 entries, remember? Before yesterday. As turtle soup traders, we have 3 entries. Number 1, turtle soup. Number 2, order block FVG. Number 3, OTE/breaker. And I hope someone's recording the whole thing. Does someone have the whole thing? Let me go check. Does somebody have the whole thing?
Yes.
The whole thing, huh?
Yes.
Yep.
Well, not the
5 hours
beginning,
and
like the first
20
hour,
minutes.
that the bonus
The first
one.
3 hours was a bonus, right?
I don't have the bonus.
All right, it was irrelevant. All right, so I have 2 people confirming that they have Lars and Rip. All right, buddy, thank you. So
Romeo, when you said you wouldn't be going over time, is it only in this lecture or you won't be talking about it?
we finish soon, my friend. Time,
No.
again, I will direct you to the videos of ICTs where he talks about it. I'm going to go and teach him his stuff. So you can go to his videos, and I gave you a representation of the open, high, low, and close. That's all you need about time. I believe that everything past that is noise, right? 1, 2, 3 trades per candle. That's all there is. Open, high, low, close, and an OTE in between, right?
Okay. Thank you.
As I said before many times, my Twitter and my YouTube. I didn't show you an example right now. So, moving on. Range low, range high, right? Over here as well. Check this out. Let's go to ES. Let's go to something more modern. Right over here. Right in ES. Now be honest and tell me, what do you see? Every one of you sees a market structure shift. Yes or no?
Yeah.
Am I mistaken?
No, you are correct, mate.
I mean, by definition, by the pattern's definition, it is a market structure shift. Yes or no? So, how would you filter out the fuckery that happened later on? Why did this happen? Why did this?
I actually remember this.
Why did this
during the 2022 mentorship?
Why did this market structure shift fail? I remember it too. Why did it fail?
The only thing Michael said was because we had swing high form above the equal highs at the left in May.
Very good.
And a seasonal tendency.
The swing high is the closest, is one of the earliest indications of a top or bottom forming, right? A swing high is the closest indication of a top or bottom forming for a specific reason, which you can go figure out by yourself. So why did this happen? What's rule number one? What's rule number one?
Don't buy highs.
Buy low,
don't
sell
sell
high.
lows.
Buy low, sell high. Buy above highs? No, definitely not that. Buy below lows, sell above highs, right? And don't buy above highs and don't sell below lows. So keeping this in mind, what would you be doing right now?
You shouldn't be buying.
Like live the moment. This is price right now in front of you. What would you be doing to the price?